This video series is part of the Furniture Flipping 101 program's Business Management Bookkeeping module. The series will walk you through how to use your bookkeeping software to keep track of your small business. The business management course and videos will work for anyone who builds or creates items and sells them. Check out the program's overview video if you aren't already enrolled. The link is in the description below. The bookkeeping module teaches how an item's assembly and sale impact the different asset and expense accounts. If you have a chance, watch the Purchase, Assemble, and Sell Debits and Credits Explained video, which gives you a quick overview of the interaction among the different accounts behind the scenes in bookkeeping software. Here I will go into detail on how these transactions are processed. In earlier videos, we covered how to set up your bookkeeping software and chart of accounts, enter purchases for your business, and assemble purchased inventory assets into assembled items. In this video, we'll look at entering the sale of assembled assets, applying a discount, and how to record a deposit and payment. While all transactions entered in your bookkeeping software are essential, one of the most important transactions you will record is the sale of an assembled item. A sales transaction involves several accounts and moves values from an asset to an expense account, which is critical to have right at tax time. There are two ways to post a sale if you use Sage 50, which we'll look at in this video. Suppose you use another software like QuickBooks. When you sell a piece of furniture, the item should adjust the inventory cost of goods asset and the assembled inventory asset accounts. Make sure you've set up the accounts as discussed in the earlier inventory video in this series. We will look at how to add items directly to your sales invoice later in this video. And if your software doesn't have either of these features, you can post to the correct accounts using the General Journal, which I cover in an upcoming video. Before you post any transactions, determine how your software posts a sale. Does it allow you to add any of the cost of goods expenses to the sales invoice, or does it only post to the revenue and bank or credit card accounts? Here's the scenario we'll work with in this video. You are approached to provide a quote for a commissioned dresser. The customer will provide the dresser and wants you to purchase the hardware, paint, and other supplies. They set a budget of $70 for the hardware. You find suitable hardware for $55. Your markup on hardware is 20%, which covers some of the time and trouble of finding and buying it. You prepare a quote for $350 for the dresser plus hardware at $65. The quoted total is $415. The customer agrees to the quoted price and service. They sign the contract and provide a $50 deposit of $207.50. You buy the hardware for $55 and consumables for $25, which is paint or other supplies. You complete the piece and the customer pays the remaining $207.50 and picks up the piece. In this video, we'll go through how to enter the sales quote, which we convert to a sales order and then a sales invoice, the purchase of the hardware and consumables, assembling an item, and posting both a deposit and final payment upon completion. Let's look at how an assembled item works and what happens behind the scenes when you assemble and sell an item using the Sage 50 Assembled Item feature. In the inventory video, you saw how to set up your inventory accounts and link to the inventory categories. To help with the video flow, I will work through these steps differently than they may occur in your business. In reality, you will have already created the quote in Word or your bookkeeping software before you make purchases, but I want to run the sales steps through consecutively so you can see how they work together. Let's take a look at the trial balance before we begin. There's a balance of $497 in the 1530 hardware account from the suppliers and purchases video. Let's make the necessary purchases. You post the hardware to the 1530 hardware inventory and the consumable inventory to the 5060 consumable inventory expense account. Notice the changes to the 1530 and 5060 accounts. Before I create the sales quote, I want to look at the two options for assembling an item. You can either pre-assemble an item or add line items to the sales quote, order, or invoice. First, we'll use the assembled item option and add it to the inventory. You can learn more about assembling inventory in the inventory video. I won't get into too much detail in this video. Let's build an inventory item by adding the hardware inventory for $55 and the consumable inventory cost we just posted. Now we will create the assembled item. Set the sale price to $4.15, the quoted price. Add the quantity of 1 and the cost of $80 to ensure the transaction is balanced. Let's look at the transaction detail report. Here you'll see that the two purchases, $15.30 hardware and $50.60 consumable inventory costs, were credited, which mean they went down in value. The amount was assigned or debited to the inventory asset account. The inventory now has a value of $80 for the assembled item, and the hardware account has been reduced by $55. Looks good. We will process the transaction. Now let's look at how we add the item to a sales invoice to process the sale. I don't use Sage to create my quotes. I use the quote document I've included for students in the business management course. Because it is Microsoft Word document, it is flexible and I can include my terms and conditions, turning it into a contract when the customer signs it. However, for this video, I'll enter the quote in Sage to show you how quotes, sale orders, and invoices work. Here's the assembled item we created earlier. If you wanted to change the price, you can go in here and edit it. Notice that none of the accounts changed. That is because there was no transaction. You didn't sell anything yet. Once the quote is accepted, you can convert it to a sales order, meaning you still haven't completed the work, but the customer has agreed to you doing the work. Now you would complete the work. Then, once you complete the piece, you can convert the sales order to a sales invoice. One problem with this process is that you can't apply a deposit until you convert the sales order to a sales invoice, which seems silly since the deposit is received before the work is done, but that's how the software works. The invoice should be dated for the date we complete the piece. So let's change the setting to allow this, since my sample company system date is set to the company start date and the completion date is in the future. You likely won't need this in this scenario, but I'll show you how to do it should you need it. Now let's convert the sales order to an invoice. Since we will receive a deposit against this and the customer hasn't paid in full, we'll mark it as pay later. Processing the sales invoice will post the income to accounts receivable. If you miss posting the deposit and post the full payment, you can set it to cash rather than pay later. You can also choose the credit card account if it is credit card sale. Here we'll use cash since most of us deal with cash transactions. Your sales custom work revenue is credited with the invoice amount, which means your revenue goes up. You can see how posting the sale transaction will debit the expense account, assembled inventory cost, and credit the asset account, assembled inventory. This means your expenses are now recognized and your asset account is now reduced by the inventory value of the sold item. The item we assembled has now been removed from the inventory. Hopefully this is all starting to make sense. If you have any questions, please let me know in the comments. The other option to post a sale is assembling the item in the sales quote or invoice directly without using the assembled inventory item feature. This process uses service items created in the inventory and services area. Service items are items without an expense attached, unlike assembled items. You can reuse the service item as many times as you like. Notice that it doesn't have a quantity because it isn't a physical asset. If you use QuickBook items, you can follow this scenario to process your sales. Now we need to replenish our inventory since we used it to assemble the item earlier. We will skip the quote and order steps and go straight to the sales invoice. You can use the same process for service inventory items as assembled items. Add the dresser service item and enter your quoted price for $350. Add the quoted hardware amount of $65. Notice the error message. Remember how we added a 20% markup on the hardware in the quote? When we assembled the item, we did not need to worry about posting the markup because it was included in the assembled item selling price and posted to the revenue account. Here, we added a service of $350 and the hardware value as $65, as shown in the quote. By doing this, the transaction credits the hardware asset account by $10 more than was debited, so we cannot record this purchase because we cannot have a negative inventory. So how do we get our sales invoice to match our quote? The $10 is revenue, not hardware. We're going to add our markup. I created this count in an earlier video. You have two options. You can post the $10 markup as a separate service item called markup, or add $10 to the dresser's base price and enter $360. I prefer the markup line because it provides more detail if you want to look back at the transaction. Those were the two methods for posting sales transactions. Before we look at posting the deposit and payment, let's look at discounts. Sometimes you'll offer a customer a discount or negotiate on the price. You can post these in one of two ways. The first is to use a percentage discount field on the line item. You need to apply this discount to each item you add and ensure the final price matches the amount you receive from the customer. Notice the revenue shows $373.50, not $415, and there isn't a value in the 40/20 sales discount account because it is at zero. Now let's use the discount field at the bottom of the sales invoice. I will take out those discounts and apply the $41.50 or 10% off there. Watch what happens now. The revenue account is $415 and the $42.40 sales discounts shows the $41.50. $42.40 is a contra account and is subtracted from the revenue. The result is the same, $373.50 in net revenue. However, you can now see the value of the discounts you gave in your trial balance. It is your choice which method you choose, but choose one and stick with it for continuity. I prefer the discount field for two reasons. One, it shows in the trial balance, and two, there is less math. Often a discount isn't a percentage, but a dollar value. Maybe you gave them $25 off. Using this discount field means I don't have to do the math to figure out the percentage. Now let's look at taking a deposit. In the earlier scenario, you received money in two ways, a deposit and a final payment. You may need to turn this on by checking this feature up here under Receipt. I've gone back and removed the tax from the invoice and deleted one of the sales to help simplify our transaction. From the Chart of Accounts video, you may recall that deposits go into your liability account 2460, prepaid sales and discounts, and your bank account is debited to balance the transaction. When the final payment is received, the payment and deposit are applied to your revenue account 4030 custom work, and the final payment goes into your bank account. Let's look at the transaction detail and trial balance. Watch what happens to accounts when I process the transaction. So now we've received the full amount of $415 less the credit for the deposit. So today's payment is $207.50. So now the checking account will go up, prepaid sales will go down, and accounts receivable will go down. So now our checking account has $415 in it. Our revenue has $415 in it. Hardware has more money in it because it canceled the one sale. That brings us to the end of the customer and sales walkthrough. See the upcoming videos on general journal entries, banking, and reconciliation.